All right, welcome to a beautiful Tuesday evening market review. So we are starting off with Ethereum because I really like the structure on Ethereum, especially on the time frames H4 and below. So I will look at the structure. We have a clean range high and a clean range low. Range low. There's a deviation to the bottom and top. This is where the market tried to break down below the range, and it does this after that, right? Breaks the market structure, full reset, and a buyback up high. So we're basically looking to take the market to the range high and a possible breach as well. Okay. So simply based on the structure, we are going from range low to range high. That's it. That's what we're doing. How does this trade look on the Fibonacci? So again, any push towards the weekly open or any drop towards the weekly open is a buy, expecting the Monday low to hold, targeting the last week's high, or maybe somewhere in there. So the trade in here would look like this. Expect this low to hold and target that. Now, one problem I have with this setup is that instead of taking liquidity, we could end up becoming liquidity. How? So if you must have noticed or not, doesn't really matter. In crypto or even in indices, the Monday low when once put in, right? Which can only be known once Tuesday starts. So when market puts in a Monday low and starts to rally off, right, gives a break of market structure, gives confidence to the market that it's going to go higher. It sometimes tend to revisit that Monday low, take out that low, and then move towards the target. So since my stop is actually at the Monday low, I believe I could end up becoming liquidity. So based off of the market conditions, right? Market conditions are not very sort of, I would say trade worthy. Let's just call it that. The market conditions are not very trade worthy. So in this case, what we can actually do is we can move our sort of entry to like a 90% drawdown of our stop, and yeah, extend the stop basically to that. So it's 58, right? We do 45 ish. We can expect this market to hold this low, and we can have similar targets. So if you want to be a bit more conservative, what you could do is you could risk 50% on this and another 50% on this. So in case the market doesn't go down there and fill you, you're still in with 50% size and you're targeting that. Okay. So trade is still on. Another scenario, market goes in, fills you, almost stops you out, gets you another fill, and then goes to the target. And if you're wrong, you get taken out completely. That's fine as well. Right. So problem is which one to go for. So I cannot choose one, right? Because if you zoom in and you look, the market has already given you the liquidity test. Or not the liquidity test, but like, the drive down that happens once the market decides it wants to go up. So this is where it pretty much decided it wanted to go up, and then we have this big drive down, which flushes out everybody. All the traders from weekend. And now it's given a break of market structure again. So for the market to come back down here really doesn't make any sense in terms of, I would say the trade psychology perspective. It doesn't really make sense for the market to come back down there. But it's crypto, right? It can do anything. So we'll go with the dual or sort of the hybrid setup where we'll also extend the stops there actually. So that is going to be our trade. So 50% risk on this and 50% risk on this, and targeting the last week's high. That's it for the Ethereum trade. I know I went a lot in depth because recently I've got some subscribers that know me IRL, and they do not really understand what I do here. So if I pick a trade setup that I am taking, I would personally make sure that I go in depth. Okay, so this is one trade setup that I am looking at this week. I think we already, oh, not too much. So that's it. On Bitcoin, I didn't really understand anything. And yeah, don't really understand anything. Don't understand the structure on this market. So let's leave it at that. We are indeed going to go long Ethereum. That's for sure. Currency market extremely bullish. I'll again go over the reasoning why, you know, I feel that the bullish momentum might actually continue with the currency markets, at least for this week. Actually, I wanted to show the dollar. Yes. So I don't know if you remember or anything, but we wanted the dollar to go there towards the gray, which is the yearly open. And it's going there quite nicely after the weekly open. Only problem is not giving any pullbacks to the upside, so which means we cannot get filled on the euro long. And yeah, that's a problem for us because analysis is it's nothing, right? It's nothing to me. Analysis to me is nothing. Being right on the analysis is just it's like paper trading. Okay, means nothing. So what I wanted on dollar was to get a pullback towards the weekly open and then go to the yearly open. So far, it doesn't look like it, which means we cannot get a pullback on euro to go long, and that's a shame. Last week there was a good trading opportunity. I won't go over that, but last week there was a good trading opportunity. This week, none. Right? The market has opened and it's set off. Gone. Right? It's done with the 1.2x extension. So this is the weekly 1.2x. Now it's going towards the 1.5x. And I doubt I'm getting any pullback. So we'll just leave it at that. There's one area where I went long. Sorry, there's one currency where I went long. And I'll have to cut my orders now. Because my area of interest was this. So once the market comes in there, to me that's the trade done. So when NZD USD broke and closed above the last week's high, and also the 1.2x extension, I said that any pullback towards the last week's high or below the last week's high is a long to target the 1.5x extension, possibly a breach of that. The target has been hit and we did not get filled. So yeah, this week has been like that. Okay. CAD again. No sense to, go short now. It's already into the target, the high time frame target. I'll show you on my price action chart. Look at that. Look at this mini range on CAD. Done. Right. Now if we get a break below this, then we can look to target that low. And look to go all the way down to the yearly open. Because we are in a very big range and we've just been rejected off of the high. So obviously this kind of ranges, it takes months to form, but the current immediate target has been fulfilled. So I don't see a reason why you should go short on CAD. You're at the range low. Again, same case with everything. There's one asset where I went short and now I'm out to close that bet. Close the ask because again, I have not been filled. It's just oil. So look at oil structure. I really liked the structure on oil. So the market's in a hard downtrend. It hits some kind of a support level where, it ranges and deviates and gets back above. As soon as the market starts to break market structure, right, or as soon as it breaks market structure, a short downtrend ensues. And then after that, it's pretty much gone to the low again. Which tells me that this whole rally was just a liquidity grab. And the market's now probably going to go and make a new lower low. So watch out for another sort of leg down on the oil, which is what I was expecting this week. But yeah, as soon as the market's open, it's tested the last week's low, get back above the weekly open, broke down, and then going straight to target. So yeah, no fill this week on any asset, which is a shame. Right, no opportunity to make money. Gold and silver, same thing. Hitting target before even it fills you. I've placed a blind sort of bid on Nasdaq. So this is a gap, and we have that 3 white cross pattern. So what I expect the market to do is, if it does some kind of a flash crash, where it decides to come back below the last week's high, and its weekly open and monthly open, I expect all of these lows to get taken, but I do not expect the market to fill the gap. So that's my stop, and a sweep of this liquidity is my fill, and that's my target. 1.2 and 1.5 extension. Bit of a YOLO trade. So let's see if it fills or not. So that's about it for the review. And I'm losing my voice, so it's better for me to close things. Metals are something that I want to really look at, because if you look at gold, it's now into price discovery again, right? Well, it got into price discovery again. So don't shy. Uh, don't shy of going long on gold. I know a lot of people will say, "Ki," a lot of people will say how further up it's gonna go. You don't know, and they don't know either. So if a market has gone into price discovery, please buy the fuck out of it. Okay, so I'm gonna do the same, right? Typical fib play. So any pullback below the last week's high or the weekly open is a long to me. Okay, expecting not the low of the week to hold, but this low to hold, and expect, since the market is come already there, we're expecting 1.5x to also get tagged. 1.8 hour trade. We can work a little with the entry exit in order to get the R above 2, but this is the trade idea based on Fibonacci and based on the macro as well. Price discovery, right? Clean break and hold above the last week's high. Any pullback down there is a long to the 1.2x extension and the 1.5x extension. Simple trade. Silver, not so sure of it. Maybe same thing as gold, but if you're already going long on gold, try and avoid a long on silver as well. Because if they both fail, then you lose money on both ends. And that sort of amounts to losing money on the same bet, which you don't want, right? Double the money on same bet. You don't want to lose that. That's about it. The YOLO bid on NAS, you know about. My logic to go long on gold, I just discussed. And the most important Ethereum trade. That's about it for this week's review. If anything comes up, I'll update. Bye bye. Take care.